Hey guys, if you want to buy a home in Las Vegas, but you're not sure how much it's going to cost you, then this is the video for you. In today's video, I'm going to be breaking down all the fees associated with buying a home in Las Vegas. I'm going to tell you what they are, where they come from, how much they are, and some other things that you need to look out for when you're buying a home in Las Vegas. So if you're interested in that, stay tuned because we're getting after it right now. Hey guys, it's Tom Radacci here with Living in Las Vegas YouTube channel. In today's video, I'm going to be breaking down all of the fees associated with buying a home right here in Las Vegas. We're going to talk about what fees are, where they come from, how much they are, definitions, all that sort of stuff, so that when you go buy a home in Las Vegas, you pretty much know what it's going to cost you before you start the process. But before we do that, guys, please go down below, hit that like button, subscribe button, and smash that notification bell. That way, you won't miss any of my videos here on this channel. I talk about moving to Las Vegas and living in Las Vegas real estate, all that sort of stuff, guys. So if that's what you're interested in, please go down below and make sure you hit that subscribe and notification bell so you get notified of every new video I put out. And with that, guys, let's pop down to my computer and I'll go through all of the costs just like I would for one of my clients.
Hey guys, you should be seeing my computer screen now. So this is what real estate agents and realtors call a net sheet, which is really just a sheet we use to estimate for our client, whether they be a buyer or seller, the total costs or the amount they're going to put in their pocket at the end of the deal. So we're going to go through this today, and I'm going to show you all the different fees, describe what they are, talk about how much they are and where that number comes from, and then you'll kind of see the total at the end. So today we're going to be using a home price of $300,000, and we're going to be talking about the cash, conventional, FHA, VA, and assumption type of loans, and we're not going to be talking about seller financing. So before we get started, guys, I know it's all the way here at the end, earnest deposit, but I want to talk about the earnest deposit first. So the earnest deposit, or sometimes it's called EMD, or abbreviated EMD, is the money that you put down on the home initially. So it's kind of like buying a puppy or buying a used car from a private sale. You give some kind of amount, some kind of funds up front to kind of hold that puppy or the car or whatever it may be, so that the seller doesn't sell it to somebody else. So that's what earnest money is, and that earnest money goes along with your residential purchase agreement, or RPA, which most realtors just call the offer. When you make an offer on the home, your earnest money kind of goes with it, and in a manner of speaking, and that holds the home for you if your offer is accepted by the seller. So earnest money can range. It's somewhat seller dependent. They can put whatever earnest money, they can ask for whatever earnest money they want, but typically it's about 1% of the list price of the home. So our list price is $300,000 for this example. So I'm going to use an earnest deposit of $3,000. Excuse me, $3,000. So you can see right there, total estimated cost is $3,000. So here we go. All right. So let's start at the top. So we'll start with down payment. So we're going to be talking some of these loans, like the VA, you can get with 0 down payment, but I'm going to put in $9,000 because that's 3%. That's 3% down payment, and that corresponds well with a conventional mortgage, which is what I would say most people use to buy a home. In the case of an FHA loan, your down payment can be as low as 3.5%. For a VA loan, your down payment can be 0%, but of course you got to be a veteran, or there's several other people that get to use a VA loan. Assumption we'll talk about later, and then, like I said, seller financing we're not going to talk about. Next, guys, we're talking about mortgage cost and prorations. So it's important to say that about 2/3 of the fees and all that sort of stuff, the charges that go along with buying a home, usually come from getting a loan. So if you're buying a property in cash, then you're probably going to pay, or you're definitely going to pay less fees and that sort of stuff. So let's start with the first fee, which is a loan origination fee. So the loan origination fee is typically about 1% of the financed amount. So since we're putting 3% down on this house, we're financing $291,000 loan, and 1% of that is going to be $2,910. In this case, we're not going to do any discount points, guys, but a discount point costs 1% of the loan amount, and it lowers your interest rate by 0.125%. So if you were buying a house and the interest rate was too high, making your monthly payment too high that you couldn't afford it, then you could use some spare change on hand to buy down the interest rate in the form of discount points. So one discount point for us would cost $2,910 and would lower the interest rate by 0.125%. But in this example, we're not going to do any discount points. The next fees, guys, are going to be the underwriting fee, the lender document prep fee, and the loan processing fee. In Las Vegas, those are typically about $500 a piece, and those are normal fees that most lenders charge to do the paperwork, to evaluate all your information, really all that sort of stuff. It's nothing particularly complicated. So those run about $500 each, so about $1,500 total. This is one area where I really recommend that you shop around for lenders. I tell all my clients, make sure you go out, shop around for lenders, talk to 2, 3, 4, 5 different lenders, as long as it's not hurting your credit. See who has the lowest fees, see who can close the quickest, see who gives you the best interest rate, all that sort of stuff. Make sure you get it all on paper, get net sheets, get all kind of paperwork from them so that you can take that to the next guy and say, hey, such and such has a lower interest rate, yours is higher, but you can close faster, and kind of negotiate your way to the best possible deal. Next is the VA funding, FHA, mortgage insurance premium, or the conventional PMI fee. So if you have a VA funding, if you have a VA loan, you're using a VA loan, using an FHA loan or conventional loan, you may have to pay this if you're not putting 20% down payment on the home. If you are putting a 20% down payment on the home or larger, then you don't have to worry about this. But basically what this is a kind of prepaid insurance. In the cases of the VA and FHA, that basically goes to cover the lender in case you were to default on the loan. The conventional PMI, you can pay up front, but the majority of the time, I would say people just lump that into their monthly, so it'd be an extra like $100 or $200 a month every month until they reach 20% equity in the home, or excuse me, 22% equity in the home, and then that falls off. Or if you get to 20% equity and you refinance, of course that restarts the time of your loan, right? So if it took 2 years, if you had 28 years left on your loan and then you refinanced, then you're going to go back to a 30-year loan. But if you had 20% equity, then that conventional PMI is going to fall off and your monthly payment is going to be lower. So in this case, we're just going to put 0 for all of those. Next fee is the appraisal fee, guys. This is the fee that the lender charges to have an appraisal go out to your house and appraise it. An appraisal is not always necessary. It depends on multiple factors, like the amount of money you put down on the home. But when the lender does want an appraisal, it's because they don't want to lend you more money than the home's worth. So in this case, they would probably be appraising the home since we don't have a very large down payment, and they want to make sure the home is worth at least $291,000. Typically, an appraisal will run you in about $400 in Las Vegas. Hopefully, the appraiser doesn't have to go back out if there's some kind of issue with the property, maybe a major code violation or something like that. Sometimes the appraiser won't appraise the home, and then they'll have to come back out at a later date to finish their work, in which case it's usually like $100, maybe $200 extra fee every single time they have to do that. So if you are going to have an appraisal done, make sure everything is the way it needs to be so that when the appraiser gets there, he can get his job done and not have to come back out. Otherwise, you're just going to be wasting money. Next is the credit report fee, and it's just what the lender charges to run your credit. And then we have the tax service fee, which is just a fee the lender charges to look at your taxes and the taxes on the home, that sort of stuff. Nothing too major, nothing too expensive. Then you have the flood cert, which is just the certification that the lender makes sure your home is not, or the home you're buying is not in a flood zone. Because if it is in a flood zone, then you're going to have to get flood insurance, and that can be pretty costly. So make sure the home you're buying isn't in a flood zone. You can look that up through FEMA. You can look that up through other places. You can try to talk to your lender before you put an offer in. All these sorts of things kind of point you in the right direction. Ask the listing agent of the home if you can. Maybe they know if the home is in a flood zone, because like I said, that can cost you a pretty penny if it is. The next fee is the assumption fee. We don't have an assumption fee here because we're not assuming a loan. What that means, assuming a loan, so that's if, say, this home already had a mortgage on it. And say that you were buying the home from me, for instance. I already had a home mortgage on this home, and you just were taking over that mortgage, and I was leaving the mortgage free and clear. That usually doesn't happen because most lenders have what's called a due on sale clause built into the mortgage loan contract. And that means when the home sells, the balance on the home is due. So that means you can't assume the mortgage because the loan has to close at the sale, at the close of escrow, or when you're actually signing all the paperwork. So most of the time, that's not the case. It's very rare to see that. So we'll just move on. Next is interest. So you're going to pay interest, taxes, and insurance based on what the seller already paid. So if you're buying the home today and the seller already paid, 2 months worth of interest, taxes, and insurance, then you're going to calculate that here, and it's going to show up in this column, and you're going to have to pay that back to the seller since they're selling the home before the last day of when they paid that stuff. So that's something to keep in mind, but this is pretty common to have on every single home, and it's usually not that much money. For this case, let's assume we're going to pay interest for 15 days because we're getting the home in the middle of a month, and the seller paid their mortgage for the whole month. And let's do a little calculation here. Let's assume we're getting a 3% interest rate for the mortgage. So we're going to take 0.3 and we're going to multiply that by the loan amount, which is $291,000, which is giving us $8,730 total interest every year. So then we're going to divide that by 365 days to get the amount of interest per day. And that's going to be almost $24. So we'll just call that 24 times 15. And $360 is the amount that you'd be paying here. And you would do the same kind of calculation for taxes and insurance. But in our case, we're just going to leave them zero. Next, we'll talk about recording fee, guys. Another very standard fee. Las Vegas right now, it's running about $75. The escrow fee is going to be specific to the price of the home, and this is one fee that actually generally gets split 50-50 between buyer and seller. It doesn't have to get split 50-50, so if you want to make your offer more competitive, have your realtor change this in the RPA so that you're paying all of it, or maybe you're paying 75% of it, something along those lines, just to take some more off the seller's plate. But in this example, we're just going to leave this blank because we don't actually exactly know what the escrow fee is going to be. Next is the owner's title insurance policy right here. So what that is, that protects you in case the title is not clean. So if there was some kind of blemish on the title that the seller didn't know about, then you bought the house for them, and say 10 years later somebody shows up with the actual title and they can prove that that seller never should have been able to sell the property to you, this insurance policy will kick in, and it's going to cover all of your damages because of the sale and because of this whole mix-up. So that's also price specific to the home, so I don't have a number for that. The next one is the ALTA lender's policy. That's the exact same policy, except you pay for it and it covers the lender in case you default or something else happens on the loan. Next is the inspection fee. Guys, this is the most ridiculous fee I've ever heard of. You think inspection, they're like come out and really inspect the home. No, this is not that. This is not your home inspection that the buyer pays for. This is literally someone driving out to your house and making sure that the home actually exists. And right now it's running about $50. It's basically an eyes-on fee to make sure the home is a real thing, to make sure nobody's committing fraud and trying to just get the loan amount and then jump ship and take that money and do whatever they want with it. Closing protection letter, don't have to worry about that. Endorsements, don't have to worry about that. Mobile notary is running about $125 per person, so the seller would also have to pay this. It's not always mobile. Sometimes you go into like the title company's office and sign with their notary. Other times it's mobile notary. Because of COVID, we were doing a lot of mobile notaries, but that's kind of going away now. The reconveyance fee is typically seller paid, so we don't have to worry about that. The real property transfer tax is a county specific tax. So Las Vegas is in Clark County. So in Clark County right now, this could change, is $5.10 per $1,000 of home value. So in this case, we have a $300,000 home. And so we're going to divide that by 1,000. We get 300. And then we're going to multiply that by 510. So we get $1,530 for the real property transfer tax. Again, guys, a lot of this stuff is negotiable. If you want the seller to pay for it, if you want the buyer to pay for it, all these things can be changed up and arranged. Most of the time, I think there's only one fee that I'm aware of that the seller absolutely has to pay, and we'll get to that later. Before we move on though, guys, please go down below if you're getting some value from this video, like, subscribe, make sure you hit that notification bell so you get notified every time I put out a new video, so I'd hate for you to miss anything. With that, guys, we'll go here to miscellaneous prorations. This is very similar to the interest, taxes, and insurance thing we talked up here. I mean, this could be rent, utilities, anything that the seller prepaid, and that they prepaid for a month, but you're taking their home off. You're taking the home away from them in 14 days, so that you're going to owe them for the remaining of those days because they don't have the home during that time. So that's what that is. Then we have the assumption setup and collection fee. This is also zero for us because we are not assuming a loan. In this example, I was kind of mostly talking about conventional loans. Again, we'll talk about these other ones, but we're not talking about any kind of assumption. That's rare and not very common at all. Next, guys, we have the broker's fees. So since we're doing the buyer, as a buyer, normally, well, I shouldn't say normally because there's no set price for agents and all that sort of stuff. If anyone ever tells you there is, they're lying. That's actually called price fixing, and it's completely illegal. So don't let your realtor tell you that they charge the same thing as everybody else, or anything like that. But as a buyer, typically, in my experience, you only pay a small fee or you pay nothing at all, and most of everybody's commission comes out of the seller's proceeds. So that's how I get paid. I get paid from the seller's proceeds. So you're not paying the seller anything or anything to them. And then in this example, we're going to say additional compensation to broker. We're going to put $5.95 because this is what my broker charges for you to use me. But this is not how I get paid, guys. So I don't see this $4.95. This actually just goes to them, and I don't get paid until after the close of escrow. And then my fee actually comes out of the seller's commission. So this is why using a realtor is awesome, guys, because most of the time, it's little cost to you, or it's even free. Sometimes this is zero. So make sure you talk to a realtor, get some kind of real estate agent, and make sure you find out what their fees are. Make sure, you can always go talk to a few, negotiate. This is absolutely negotiable. You can try to get this down as much as you can. And again, sometimes it's zero, but you want to find someone who charges you a fair price, isn't trying to take advantage of you. But in most cases, it's common for the listing agent to charge about 6%. I've seen a little higher, I've seen a little lower. Again, there's no standardized fee. And from, let's just call it 6% in this example, from that 6%, the listing agent then decides what kind of co-op fee they want to issue, or co-op pay they want to issue. So in this case, I would be, if I was the agent, I would be receiving a 3% co-op, and the listing agent would take the other 3% co-op. But that total 6% would come from the seller's proceeds. Next on the list is common interest communities. They're also sometimes called HOAs, or just abbreviated CIC or HOA. As you can see, there's a couple different things here, and yes, there's actually 3 columns for each. So in some areas of Las Vegas and even other areas of the country, it's common to have a master planned community fee or master planned organization, and then a second and a third HOA or common interest community, whatever you want to call them. In our example, we're not going to have any capital contribution, any transfer fee, any demand fee for the buyer. These are fees that typically would go to the seller, so we don't have to pay those in this example. This resale package right here, guys, this is what the seller absolutely has to pay. Everything else is negotiable, but the resale package has to be paid by the seller. But in our case, all of this stuff is zero, so you don't have to worry about it. Last but not least is the miscellaneous costs. So home inspection is going to run you about $500, guys. Pretty normal. I definitely always recommend you get a home inspection. I just had a client who got a home inspection on their home. We have an escrow right now, or we did have an escrow. We ended up backing out of the deal because seller didn't want to fix anything. We found out the air conditioning was busted, and there were a bunch of other problems that we didn't know about, and supposedly the seller didn't know about. but they didn't want to fix them, so we got out of the deal because it was going to cost my client too much money. If we would not have done that home inspection, we never would have known about the problems. My seller would have bought the home, my buyer would have bought the home, and then they would have been on the hook for all those repairs once they moved in and found all those problems. So definitely recommend always get a home inspection. Only takes about an hour or so. Really doesn't cost that much. $500 can save you, in this case, my client's case, it saved about $30,000, give or take. So that's a pretty good trade-off. So I always recommend get a home inspection, guys. Unless there's a reason to really waive it, I wouldn't do it. Next, we have other miscellaneous inspections. So if you're going to have a VA loan, you will have to have a termite inspection. That's a requirement of the loan. Now, in Las Vegas, termites are absolutely not an issue. I've never seen a termite. I've never heard of anyone having termites. So if you're using a VA loan in Las Vegas and the seller's complaining about the termite inspection, about them finding something, or they're just worried about the inspection in general, it's absolutely ridiculous because there are no termites here and it's not something you have to worry about. Even with the termite inspection, VA loans in Las Vegas are super easy to close, super common, totally normal. There's no reason to worry about it. So that's a zero for us because in this, we're talking about a conventional, and sometimes that would go to the seller, sometimes it would go to the buyer. It just all depends on how you negotiate. Home warranty plan is going to run you about $600. Here's another thing. I don't necessarily recommend this, excuse me, as much as the home inspection, because not all appliances are necessarily coming with your home. So if you're moving into a home and it's coming with all the appliances, stove, refrigerator, washer, dryer, everything else, then I definitely recommend you get a home warranty. And I recommend that your realtor write it into the contract that the seller pays for it, because they are their appliances. You're moving in, and so any damage on day one, they would be responsible for. So just in case you don't get stuck with something, a broken fridge or something like that, I definitely recommend you get a home warranty. If you're buying a lot of appliances, say the home you're buying doesn't have a fridge, doesn't have a washer, dryer, a home warranty can still be advantageous because it covers the air conditioner and other things. But the manufacturer's warranty you're going to get on your new appliances is probably going to be better than the home warranty. If you're moving your own appliances to the home, get that home warranty. But if you're buying new appliances, you might be able to save $600 here. Just think about it. Next is deposits and rents. This would be if you were buying a home that had a tenant in it and they had paid rent, past the day that you were taking the home. Say they paid rent for the month, you were taking the home off the seller's hands on the 15th, then there would need to be some rent exchange there. And then others, just anything you can write in. Finally, guys, when we already talked about the earnest money, that's down here, and so this earnest money goes into your down payment, and contributions, repair credits, and grants. So this is where you put anything that you would be paying to the seller or the seller would be paying to you. Like any kind of, if you were paying seller's closing costs, you'd put it there. Or if you were getting some kind of down payment assistance grant, like Home is Possible with Nevada, or some other kind. What is there? There's so many down payment assistance programs, guys. They're federal, state, city specific, zip code specific. I mean, there's so many out there. If you want any more information, you can give me a call. I can give you information on a bunch of down payment assistance programs. I've actually used down payment assistance programs in the past on my first home. I ended up getting $10,000, $11,000 for free, which was super dope because without it, I wouldn't have been able to buy the home in Las Vegas. But that is where those things would go, guys. Now, we'll just give you a quick summary. We'll go back and see. So we put $9,000 down. Loan registration fee is $2,900, $500, $500, $500 for these three fees. We don't have a VA funding fee, an FHA, or conventional PMI. This is a conventional loan, but we're going to be paying monthly, so we don't have anything at the close. We are going to have an appraisal. We're going to have to run the credit report, tax service, flood cert. Here's the interest we're going to pay, and we're not going to have to pay any taxes or insurance. Oh, a quick note about insurance, guys. When you're buying a home, the lender usually creates or buys you a home insurance policy and puts it in there for you to into the loan for you to pay for it at the close of escrow. But that policy is usually a couple $100 higher than it would be if you went out and found your own. So all you got to do is call your car insurance company or your renter's insurance company, whoever you insure through, and simply tell them about the house, tell them you're buying a house, tell them this is the insurance you want, this is what you're buying it for, all sorts of stuff, and then put them in contact with your title / escrow company, and those two will make the arrangements so that the home insurance policy starts on the day that you close, and you'll save yourself a couple $100. I saved myself several $100. Well, the first time I bought a home, I didn't do this and ended up paying like $300 more than I had to. But the second home, I did do this, and like I said, saved a few $100. So definitely do that, guys. Plus, it just keeps all your insurance policies in one place. It's easy to keep track of. We have the e-recording fee. We didn't put the escrow fee in because that's specific to the title company, and it's also specific to the sales price of the home. Owner's insurance policy is for you. Alta lender's policy is for the lender, but you pay for it. This is your eyes-on fee. Just make sure your home actually exists. We don't have to worry about these two. Mobile notary. This may or may not be higher depending on what's going on or if you're going into the office. Reconveyance fee. This would be a seller paid, typically. Property transfer tax. This may also be seller paid, but in this example, I just included it here just to show you what the calculation is. Your prorations, we don't have any, but if there's any other prepaids, then that would go there. Assumption, setup, and collection fees. So you are not assuming a loan in this example, and that's pretty rare, so we left that blank. We don't have any other title fees. Broker fees, you're going to pay $4.95. This is for my brokerage. Again, this fee doesn't come to me. This just goes to the broker. And this is pretty common in the state of Nevada, but I don't know if it's common where you live. But I also don't know what other brokers charge. So if you would like to shop around, you're more than welcome to. Then there's common interest community stuff. In this case, there's no capital contribution, none of that. And the resale package is actually paid by the seller. And like I said before, typically a lot of this stuff would be paid by the seller, but it's all going to depend on how your realtor negotiates the contract. Home inspection, definitely recommend $500. Other miscellaneous inspections, if you have VA loan, you're going to need termite inspection. Home warranty plan, definitely recommend, another $600, and then deposits and rents in case there was any other prorated stuff for like a tenant being on premises. And then finally, earnest money, which is going to go towards your down payment, total down payment of $9,000, which is the top. So for a $300,000 house, guys, you're looking at about $14,700 coming out of your pocket to close. I know that probably sounds like a lot, but I talked earlier about down payment assistance programs. There are a ton of them out there. Just give me a call. I get calls, texts, emails, pigeon carriers from people every day who want to move to Las Vegas, who are interested in down payment assistance programs, who are interested in homes just like this, just like you might be interested in. So guys, please, if you're interested, give me a call, give me a text, email, however you want to get a hold of me, because I got your back when moving to Las Vegas. And please make sure you go down below, like, subscribe, and hit that notification bell so that you're notified every time I put out a new video.